As far as their competitive advantage, as far as their going forward, what they're looking at, land values. So one of the questions we get a lot as well, does this look like the 80s? Are we entering a period where we could enter another farm crisis? Are farmers leveraged? Why is land value still staying so high? There was a recent, so the Iowa Land Value Survey that came out has the average value of ag land in the state of Iowa is $7,200. That's on average. That's a little bit lower than even medium quality ground, but the range is, I think, in the 9,000s down to the 6,000. So we got an average about 7,200 an acre, and that doesn't seem to be falling in line with expectations of what we've seen with crop prices. So you'd expect the return to land to be reflected by returns to commodity production primarily. Its best use, and so we haven't seen that fall. If you ask lenders on agricultural land what they expect to happen over the next 5 years, a survey would tell you they are very bullish about ag land values over the next 5 years, even being 20% higher than they are now. How can that possibly happen when I just told you producers are having a rough time of it with commodity prices, the uncertainty in the markets? And the reason that can happen is because many producers are very liquid right now, so they have a lot of cash. They had really good years in 2013 and 2014. We've seen a recession in ag for the last 6 years. We're starting to rebound a little bit. But we have farmers with very strong balance sheets, both solvency and liquidity metrics. And so they are paying that in cash for that land. And my own brother-in-law recently purchased land. He's an agricultural producer. And he said, yeah, that's a lot of money. And I don't think I can make it cash flow over the next couple of years. He said, but what choice do I have? If I want to be in production agriculture, there's only so much land around me, I have to pay those prices. And so I think longer term that's an issue, because if farmers have to continue to pay higher prices without the returns to crop production, and certainly trade gets in the way of that, that erodes the farm financial stability. As far as leverage ratios, we're nowhere near where we were in the 80s, but it is a growing concern. It's ticked up a little bit in terms of the solvency rates, ticked against us, I should say. Same thing with liquidity. And to kind of circle back around to something you said earlier, Steve, about the mergers in farms, I want to remember to say this. You see not as much merger activity that you highlighted, right? And so we haven't seen the drop of 2.5 million to 2 million in the US in number of farms, and I would say Iowa probably mirrors that. But what you do see is we're becoming more bimodal. So if you think about what the average farm looks like, if you drop a number in the average size, that number is maybe 400 to 500 acres. Your big farms are getting bigger, and then you have this new set of farms coming in, these smaller farms. So what we're seeing is a wasting of land. There's fewer middle range, like middle-sized farms. Looking at the average doesn't tell the story. We have farms that are getting big, and we have new farms that are smaller farms, and I think that's important for beginning producers too. So I think that represents some opportunities for business to think about how are our new producers going to come into agriculture? Who's going to service the smaller producers? Is it going to be the same company servicing the small producers and the big producers? If John Deere's in the back of the room, we can ask them their thoughts on that.
I think it comes back to supply and demand. There's a finite amount of land available in the U.S., so that's going to keep prices relatively high as long as we don't have any terrible economic conditions, which nobody is forecasting up here. Hopefully that is accurate. It's the same way with businesses. Right now, as I said earlier, businesses are extremely profitable. There is not a large supply of quality businesses on the market. So what that's doing is increasing the valuations for those good companies that are on the market. And I think one of the things that's going to happen over the next decade, and I'm going to get into this just a little bit, the silver tsunami has begun. There are 10,000 baby boomers turning 65 each day for the next decade, and I'm one of them. And boomers born before 1964 own 10 million businesses. If you remember what I said earlier, there were 30 million privately held companies. So baby boomers own at least a third of those. And a significant percentage of those are expected to change hands in the next decade. And there was a recent life study done by Securian Financial. I'm going to read this to make sure I get it right. 72% of business owners, 72%, with revenues of less than $20 million have no exit strategy. No exit strategy. That's pretty scary. They typically do not have next level management in place. The revenues and profits have oftentimes stagnated. They've also not reinvested in systems and technology to keep up with the competition. All these factors drive valuations down, regardless of what's going on in the economy. Despite all of this, 54% of those business owners plan to exit their business in 10 years or less. So there is going to be a large number of businesses coming onto the market over the next decade, and that's going to have an impact on valuations. But as long as we have good profitability, we have good availability of equity capital, and good availability of bank loans, I think we're going to continue to see business owners getting very good prices for their companies.
Makes sense. Yeah, but
Can I tack on one thing? This interesting about business ownership, it follows that with land as well. A land survey that came out, so speaking about structured family farms and solvency, about 82% of the land in Iowa is owned debt-free. So that tells you something about the wealth that some of these producers have who are owning the land. 60% is owned by those who are 65 or older. A third is owned by someone who's 75 years or older. So talk about the amount of land that's going to change hands soon. Also, about 20% of the land is held for family or sentimental reasons. So it's a widower whose husband or wife has passed away, who doesn't have anyone coming back to the farm. So I think we are going to see opportunities for land. I don't think it's going to be at lower prices.
So it's hard to take the closely held nature of owning farmland or buying a business. We actually should take that same mentality and apply it to our publicly traded securities. So it's your brother, right? That bought the farmland.
Oh yeah,
Yeah. So your brother-in-law buys the farmland. He's not taking a next quarter or a 3-year view of this huge cash outlay that he's doing to expand his business. We're in the 11th year of an expansion, and Steve probably has files on his desk where he's trying to get capital to come in and buy a business. Well, or you're a publicly traded investor and you need to have an allocation toward a diverse group of stocks that you can buy. The mentality across all of those areas is long-term. You know, it's long-term optimism. It's long-term American exceptionalism in most of the things that we're talking about. And so it's not the next quarter, it's not the next year, because yes, we will have a recession, and everybody's looking at me, you know I don't know when it's going to be. Yes, those things will happen, but when you go into an equity security, you buy farmland, you buy a small business, you are looking past the next election, you're looking past the next 2 recessions, you're looking past all of those things and at a long term, and that's the mentality I think every